What's up, everybody? Welcome to a very special Fuse community call. So, unless you've had your head under a rock, you probably should have noticed that we have done a massive rebrand this week, and we've also released a new white paper. So we've done all sorts of releases and information, but we're here today to answer some really kind of core questions from the community after we released all this information. Now, just to be clear, a lot of people ask the same questions. So what we've done is just sort of group them up into batches, because there's no point asking Mark the same question 30 times. So if you don't hear your specific question, just listen out, because we probably are dealing with it just in a slightly different way. So, Mark, how you doing today? You all good? Busy?
Yes, very busy. Been a crazy week, and happy to be here answering questions. Looking forward.
Nice. Yeah, it's been a crazy busy week, so it's a nice way to end things, I think. So let's jump in. So we announced Fuse 2.0, and now I think it's time to unpack it a little bit. So, Mark, let's start things off. We've zoomed in on a very specific area that we want to deal with in Web3 payments, right? Please tell us a little bit more about why we're zooming in on this and what potential you see there, just briefly.
Well, I think most of usage in the crypto space right now, people are, I think experimenting with it. That's maybe the best way to describe it. It's hard to see, this scale, like the way we use crypto today, the way the networks are built, the topics that are discussed. It's hard to see it kind of reached, in my opinion, a glass ceiling. So there's a limit to how you can scale the way it's built right now. And also, I think most of the lessons we learned in the last few years are from investors buying a token. And, there's a lot of terms in this space that only investors understand. So why we're focusing on payments? Because it's not really like this effort creating a new economy, completely new business models that didn't exist before, completely new products, and work on like a pure digital economy. In the end, it has to meet the real economy. And we want to be this bridge. I know that a lot of companies want to be this bridge, but really we think that the playbook of Web3 is what we want to use, and the best practices and the business models, but not necessarily the use cases. So we want to take traditional use cases and apply it for crypto.
Makes a lot of sense. And we'll jump into that a bit deeper. We've outlined some very core concepts of power validators, operators in the ecosystem. So some people have asked some questions about that. So we'll jump into that. But just off the back of that question there, we had a question from one of the community. Let me bring it up on the screen for you. Where are we? Okay. So this is from Rob at Fuse Prime. Now, he was looking around and he saw that Visa have announced the testing of settlements on Ethereum and account abstraction. So they're sort of playing with these ideas that we're talking about. And Rob's asking, what is Fuse building that will be different to what Visa is doing? And the second part of the question is, could Fuse provide the settlement layer to Visa that they're looking for? So two questions, but interesting.
So first of all, I think that that Visa is definitely feeling opportunity here. There's $3 trillion. I don't know if it's that number is up to date, but the volume of crypto transactions on Visa and MasterCard is it's at least $3 trillion, and it's insane. Like the amount of money getting funneled into crypto, in and out of crypto through Visa. Visa bread and butter is making money from risk management. So underwriting, risk management, they're basically built a really interesting business model in which they're the pipeline of data sitting in the middle between the banks. The customers are not really a client of Visa. So they're not really consumer facing, but they are sitting in a very important junction that every transaction, even if I go and buy a bubble gum in the shop, Visa knows exactly who I am, and it knows exactly who is the merchant. It knows exactly what I'm buying, and in real time, it gives me not Visa per se, but like this bank behind the scenes that is running on Visa is giving me a clearance to take the bubble gum and basically buy it. And I think this model is really good if you want to focus on consumer protection. So I see Visa as an important partner in crypto, but not really as the pipeline, which is what they're doing today, and not really charging 1% for every transaction people are doing, and definitely not using Visa as a technology, because Visa as a technology is very, very not secure. If you look at it's very expensive and not secure. So this architecture that you come and give the waiter your password to the bank account. So this model is really, really pre-internet model. And there's a lot of ways to improve it. That's one thing. And the other thing, the fact that you have a long value chain of companies, especially if you're in jurisdictions like Israel, or like places where there's no, like, not North America, places like Africa or stuff like that, where the infrastructure is just like, most of the users are just not using Visa, or they're just not that advanced in terms of payment systems. So in the bottom line, you need to pay more. That's the absurd. So on Visa platform, poor countries pay more than rich countries. Poor merchants pay more than rich merchants. Again, because this is how the game works. And I think the Web3 concepts and business models are radical change, because now we can suddenly, Web3, there's no borders. I think that's a game changer for Visa.
Yeah, it's a big part of it. And it's interesting that you say that you see, Visa's not going to disappear. It's an important player here. It's just that they perhaps won't be doing what they've been doing traditionally all that time. Just talking about fees there for a second as well, Mark. Like, I know in the white paper, we discussed fees very quickly. Let me just take this down, quickly bring this one up. So we put this into the white paper, and we were talking, because it's something that I think is quite important for businesses. There's a cost of doing business when you're using Visa. There's a percentage. You also have to rent the machinery, I believe, that you need to use. So, but just looking at this quickly, like, you see a basic comparison here. Do you want to just explain this a little bit?
Yes, so I think this is a nice example for Visa, but we can also definitely, Visa is definitely the most expensive way to move money. If you want to use, ACH in the US, deposit costs almost nothing, or SEPA deposits in Europe. But for Visa, there's always a minimal fee. This is also why you can't move less than 30 cents. So that's the minimal fee, 30 cents. Yeah. So Visa is also a problem when it comes to do microtransactions or non-monetary, interactions, giving people points and those types of rewards. Visa, you can also see here the value chain behind the scenes. So the interchange fee is something you need to pay for cross-border, like as a basic fee to Visa. Scheme fee you need to pay as a basic fee to the to Visa or the acquiring bank or the issuing bank. Foreign exchange fee if you want to move cross-border. Acquire markup is, if Stripe want to make, so for instance, Stripe is charging a big markup on top of Visa. Stripe and Square and PayPal, they all charge 3% or 2.9%. And that's, a pretty big markup on top of what you pay for Visa.
That's a big amount, right? Like, as a set fee, I suppose when people think about $30, a couple of dollars out of that is okay, or cents. But when you're talking figures of 10,000, 50,000, this is a significant chunk out of your revenue being taken away just for the privilege, right?
Yeah, people need to understand that there's several interesting events, that until they happen, people didn't really bother paying those high fees. So right now, the global commerce is mostly controlled by Visa. So if I want to buy something online, online shopping, Amazon, it's purely using Visa, mostly using Visa, and this is not something that we feel until recently, when Corona came and people stopped using cash, or there's like definitely less and less cash usage in economies, especially for moving money around. In the past, cash was the main way to do it. So that happened. Another thing very important that happened in last year is the inflation that started growing. So those business models, this idea that we can pay 3% for a transaction, and this is just how things work, is starting to crack this conception. And I feel like whether it's inflation pressure or technological pressures to digitize, or maybe the fact that most of the world doesn't have Visa. Now we're talking about Visa, but it's the real story is mobile payments. There's a really strong demand to do it. And you can't really do mobile payments with Stripe because it's 3% for every transaction. So this business model does not work for most use cases unless there's a merchant involved willing to pay those fees. Now, who willing to pay those fees right now? We're talking about the biggest companies in the market. So Stripe, Stripe, they have clients like Wix. They have clients like Zoom, like Slack, very strong, very high margin products like Monday, so all those companies, they don't mind paying 3%.
The revenues are so high, right? It's a minuscule part of their revenues. And when you consider like smaller stores, you often see, I'm just thinking in the real world, you go to certain stores and they have a sign up that says we don't accept card payments under $10 or things like that. You see that very often. And the reason for that is that the charge is just too significant to justify it, right? So these little merchants, these smaller merchants, are basically being strong-armed into using a service that doesn't really work for them.
I'm not even sure it's strong-armed. Imagine like it's like Louis C.K. I remember said, how fast does the world owe you something that didn't exist up until 2 weeks ago? So digital payments is new thing. Paying 3% might made sense when they started. I don't know if you're aware, but Square, for instance, one of the biggest payment provider in the US, one of the biggest institutions for SMBs in North America, their go-to-market strategy was just building the best dongle for the phone that you can buy at Office Depot or Staples, and you can just plug it into your phone and start swiping. And of course, if I can get this comfort for only 3%, especially when they started doing it like 15 years ago. So definitely a very good product and definitely very well priced. Also, the fact that this digital payment thing is a new thing. How much should we price it is not really clear, but it's clear that today it's one of the best performing business models in the world because those 3% are flat fee that is really easy to understand. If you compare it to how much a cloud service charges, it's really hard to figure it out. Or even how much Plaid is charging. But with Stripe and PayPal and Square, this is a foolproof business model. So kudos for them for finding the way to start something in this space because it's definitely the future. All payments are digital, but the bottom line is that we can make it 99% cheaper, and that's the advantage that blockchains bring, and they understand this advantage.
Yeah, of course. Like going back to Rob's question, they obviously understand this. I think the big retail banks are not sitting looking at blockchain from miles away. They are very interested and absolutely want to integrate this tech. So it's just about time, isn't it, really? Okay, cool. Thank you, Mark. Good answer to the question. I want to move into the area that we really focused on in the white paper, which was to do with operators and validators. And one of the questions I've got here is very simple. Could you explain the concept of power validators a little bit more? And I believe the reason for this question is that they are currently a validator. So they kind of want to know about the situation. Will things change for them? What's the process? Now, I know we're early, but perhaps you could outline any changes they might need to make in the future. Then we'll dive into the three key players in the network, the merchants, the operators, and the power validators. But yeah, just maybe put his mind at rest a little bit about currently a validator, what's going to happen to those people?
So first of all, the current validators are putting a staking requirement and providing a service of validating transactions. We want to have a smaller number of power validators, so we don't think it needs to be as decentralized as the network. But still, power validators are giving like another layer of service. Which is also off-chain, also other value add services. The first thing we want to start with is being able with Power Validators to decentralize the relay network. So right now, if our servers are down, the network will still be okay. But some of the products that are running on Fuse use pretty much the same non-custodial, trustless infrastructure that is all run by one node. So that's what we want to change. So relay service is something that we want to use our validator network for. And we created Power Validators as a way to generalize those services, because one thing is the network itself, and the other thing is the services that are running on top of the network. And both of them need some level of decentralization. So as we wrote in the white paper, we don't see everything needs to be decentralized, but something like a relay service, there's no advantage to have a single point of failure. It's not something hard to run. We could incentivize people to run it. And the most important thing, it allows us to give better service. At the end of the day, you want the relay server to come closer to you geographically. You want it to be scalable, so you need like this redundancy. And one operator that running relay service, I believe in the future, all of blockchains will have relays, and it will be like a standard thing, just like validators today. All blockchains have validators. So decentralized relay network is something very, very important. Next, after that, we will talk about it in a roadmap. But after decentralizing our relay infrastructure, currently it's run by us, but of course we want the validators to run it. The next thing we will decentralize is indexing data from blockchains. So if we want something scalable, we can't use a blockchain. Blockchains as a way to, like, if we want billions of users to read and write into the blockchain, it will not work because a blockchain is not a regular database. This is not what it meant to do. But you could create a subgraph, for instance, like with the graph network. And this is one of the things that we're heavily invested in the last 3 years, is really the infrastructure on top of those blockchains, the middleware, the business logic layer. And you need a way to scale this. You need a way to decentralize this. It's impossible to index all the blockchain, all the data, and have like one entity that will provide the data. We didn't do anything. In the end, we shut down one server and everything goes down. So clearly there's when you're building a blockchain around a specific use case, you know exactly what parts you want to decentralize. So that's the bottom line. Power Validators are here to help decentralize everything that is not validating network transactions, the value add services that merchants and businesses would need beyond the transactions themselves.
And in terms of the validators now today, they're basically just okay to keep doing what they're doing. Nothing is changing for them at this moment in time. They don't really need to.
There would be three things that would happen. First of all, we're going to vote on exactly how we change the tokenomics. We won't do anything without consensus for the community. And if you saw Cosmos and Cosmos 2.0, they brought a proposal. Let's build this, and then this proposal didn't pass. There was a discussion. It didn't pass again. Then it was approved. I think it's a healthy process. So that's the first step, to agree on what's happening on the tokenomics side and vote on it. But in a nutshell, it's really a higher staking requirement, because we don't need as many Power Validators as we have validators. And the second thing, we want to be able to buy the queries, access the service through one endpoint. So it's also giving like this one-stop shop for those merchants to use a fault-tolerant service. And that's very important. Imagine you have an app that is running on a subgraph, which is running on a hosted node, and suddenly somebody decided to shut it down. Then you need to upload the new version of the app. So that's something we want to avoid. And we're thinking, real practical solution, decentralized solution, need to be fault-tolerant, and you build it once, and it knows how to scale with the network. And as more Power Validators will come, the more decentralized the network will be, the better the service will be for the end customer. So it's a really hard thing to build, but I think that's you can say that's our value proposition, the fact that we're thinking about a specific client in mind, about a business that will use it and not just an investor.
Yeah, I would say so. Like, that's why. So after doing that question, I think it's important now to dive into the three aspects of it, because perhaps that would just help explain things a bit more. So in the white paper, we put this image in, which I think is really good because it very simply explains what we talk about quite often in vertical integration. So we were just talking about the validator layer, but let's just break it down, Mark. So we've got these three layers. How are they sort of interacting with one another? And how is this model, do you think, going to take us where we need to be?
Yeah, so I guess in the last 3 years, you saw our logo. It was really the three layers. So we always look at ourselves as a company that is focused on vertical integration. And this is also, if you look at all big successes in the tech world, it wasn't really about the best technology. It was really about how to hide the technology, right? How to make it frictionless and how to make it transparent for the customer. And nobody really remembers today what was the database that Google used, or what algorithm, or it's not really interesting for the public.
It's not
the end of the day,
right?
the product people wanted to use. Yeah,
it's just not a sexy topic, is it? Like, it's quite boring. Generally people don't care. They just want things to work. Like, it's not.
I think if you're built products that people used and you have experience in the tech world, you know that technology is not supposed to be sexy, and it's not supposed to be speculative. And I rather not even talk about ideology when I talk about technology, which is something people are doing a lot in crypto. Just because technology, when it works, it's usually a compromise. It's usually a lot of compromises. It's usually there's trade-offs, there's bugs, and this is just the reality of building code. You can build it. You can build the most perfect code. It has nothing to do with adoption. So, so the bottom line is that the internet was built from layers. We recognized when we started the company, and I think to a much extent it still is today, not a very mature space. The technology is very, very premature. The fact that we're speculative about it, the fact that we're even discussing pricing of the token, if it has not anything to do with the technology, it's a bit of a fallacy, and it just shows that we're early. So we started as a network play since day one, because we understood we want to build this stack open source. How do we create a stack that will be open source forever, free for commercial use, under MIT license, that any company can take? And back in the day, I'm in crypto for a decade. Actually, it's a decade and a month this month.
More now, yeah.
Yes, and I looked at networks and looked at projects, and I understood that really if we want to build vertical integration, if we want to scale this technology, we need to look to work backwards from 10 billion users, how it will look like, and clear that you won't have one network, you'll have more than one network, you will have more than one blockchain, you will have blockchains around different use cases. And also that every time a person wants to build something, it doesn't need to build the technology from scratch. If I want to build a wallet, I wouldn't need to build it from scratch. If I need to write a contract, I wouldn't need to write it from scratch. That's the whole point of contracts, that you don't need to use to build from scratch every time you want a contract. On the vice versa, you want to use the most standard, the most widely adopted, the most battle-tested piece of code. There's a strong incentive to have this transparency in open source. But unfortunately, when we looked, even today, there's no solutions that are full stack. Like, I can't just launch a wallet without a lot of heavy lifting right now. Even if I have something on the client side, I still need to figure out how to build the backend. I still need to think how to build the business logic, and I still need to rewrite it every time I want to do something a little bit more complicated. So there's no modularity, there's no open source code to use. And we understood that the future is probably not one API, one product. It's really like the internet. You have the TCP/IP, the HTTP, the HTML. You have like layers of agreed protocols, and this is exactly what's happening here. There's the Fuse network, which is the public network. Everybody can join, everybody can use. There's the middleware, which is the business layer, and that's Charge. It's also open source, but it's cloud-based, so you can run it. You can automate processes. You can deal with airdrops. You can deal with automation and minting and stuff like that. And this layer is like the back office as well. Gives you invoicing, gives you the accounting, all the stuff that businesses can't really get from just reading an RPC node or accessing an Explorer. Of course, they need a little bit more tooling. And the consumer layer, in the end, is how do we hide all of this under the surface but keep it non-custodial? So that's the bottom line. If I want to give like a quick explanation, that's the way we envision it from day one. And today we're ready to really fuse it together. Like, we don't want to be complicated when telling this story. This is why we have Charge, which sells directly to B2B, to businesses, and we have Voltage, which is a really good demo of how the consumer experience will look like, and also a really big DeFi hub, and the network will evolve.
And I think one of the most important things is, like, we talk about the sort of mainstream adoption of crypto payments, and we kind of see that through merchants, really, don't we? Like, merchants extending crypto payments to their customers and kind of doing the hard work that is required in order to get people using crypto payments every day. So this is quite an important point, I think, as well here. I'm going to pull this down. And somebody just threw a question at us, actually, which is really relevant. Here we go. When will the tech for power validators and privacy be actually built? And when can we expect these things to go live?
So we will publish a 12 months roadmap. I think power validators and privacy are two very, very different objectives. I think power validators is something that we want to focus a bit more in-house, and privacy is really something that still we need to have standardization. It's a bit like the work we've been doing the last 3 years with a lot of other protocols we're using. Like, for instance, bridging was an experiment we did at the beginning. We didn't know it will be big. We started one of the first bridges in the world in 2019, a bridge between Ethereum and mainnet. So today we know that bridging and cross-chain liquidity is big, but back in the day it was pretty new. We experimented playing with DEXs. We know that today DEXs are a thing. It's not an experiment. There's a clear demand for it. And over time, we see more and more people talking about the IDs. We actually use the IDs, decentralized identifiers and decentralized identity. And we actually used the IDs back in the day when they were only released. It was really early. We play with them again today. Fuse is in the business of looking on DeFi, looking on Ethereum, and seeing what really was proven, not just what is experimental and gimmicky, but actually what was proven. And we can bring it to Fuse because it's robust enough and we can actually apply it to our world. And I think privacy is getting there. So the IDs and privacy and account abstraction, they're all kind of like connected together to some extent. We see privacy is not only let's build just like a product for privacy. We see privacy as a must. If you look at JP Morgan and you look at Ernst & Young, and you look at pretty much all of the big Hyperledger, big centralized institution, or big blockchain, I would say, advocates, that you would be surprised, but they all have very big blockchain teams. They all work on privacy. Because without privacy, you can't really have any business processes. They're not working on Tornado Cash. They're working on like implementations. And also we see a lot of work in zero knowledge proof. So it's really clear that the entire crypto space, in terms of scaling and in terms of even bridging, and in terms of providing a way to shield transactions. So I'm not talking about illegal use cases. I'm talking about very, very basic use case where I just don't want the transaction to be seen to anyone except the seller and the buyer, or the sender and the receiver. That's very trivial business demand, and that's seems to already be solved by zero knowledge proofs, at least on a theoretic level. But it does seem like the entire industry is a focal point right now is privacy in terms of scaling. So, you asked Rob what will happen and will it be built. So I would give a little bit of an alpha here. The power validators is a process that will take more than like at least 6 months to a year. In those 6 months, we're going to need to agree as a community. So that could even be delayed more. But power validators, I would expect the first attempts, the first like test net and the first results to be in Q3. And in terms of privacy, I believe we can do something in Q2 and maybe even earlier, because privacy is a little bit like it's not really, we're not planning to build our own zero knowledge protocol.
No.
Pretty much, if you look at rollups, Optimism, and Arbitrum, and you look at ZK Sync and ZK Money, and you have Aztec and Starkware just had like a week of an events here in Israel this week, a very big event. 1,000 academics came to do an event all about zero knowledge proofs. The bottom line is that everybody are talking the same language, and that's a sign, that it's no longer let's use this method or that method, and it's still not yet mature, but at least we have a lot of projects that actually are really relevant. We announced last year that we experimented on Optimism. Optimism actually released a new roadmap a few weeks ago when they say they're going to integrate zero knowledge proofs as well. So we see that the entire industry is going in that direction, and we want to go in that direction too.
Okay. No, I think privacy is a big one because it makes a lot of sense. I think a question that people ask is, if I'm using blockchain for my transactions, is it publicly visible? That's what people generally hear about blockchain and decentralized aspects, right? So that question always arises. So I think it's quite important.
Yeah, all right, people need to remember, by the way, that a lot of changes happened in the last year or two. Since the world went multi-chain, which is also a pretty new event. Only like a year and a half, I think people really started moving assets between chains. But then rollups appeared. I really feel like people need to remember this is so early. And those technologies are going to right now we're looking at huge ecosystems like Solana that suddenly nobody's talking about anymore. So they're just very, very fluid. So what we try to do is and I think the bear market helping us a lot with it, see who is actually working on solutions and who is excited in the bear market about those solutions. So we definitely see things evolve like dramatically in the last 6 months.
Yeah, it's a really strong point. There seems to be more consensus almost between all of us that in which direction to head as well, which is a nice thing to see. And I think it's a good point. Like I was having a conversation today with one of our team, and we were talking about trading stocks. Trading stocks like 15 years ago, 20 years ago, was so difficult. Like you had to go log into your bank. It was very complicated. It almost didn't want you to do it. You had to spend a lot of money to get any value from it. And it took ages, and it generally just put people off. Today, I can pick up my phone, press 3 buttons, and I'm done. Like, I think it's an important thing that people keep trying to rush this industry forward so fast and say, blockchain's not fit for this, not fit for that. But it's like, what, 10, 12 years old? We need more time, basically. So I think it's an important point, Mark, to be honest. Like everybody wants everything yesterday in today's world. And
I'll tell you honestly, I'll give a bit of an opposite opinion. I feel like only people that live in the US and Europe, maybe parts of Europe, think that investing became easy. Most of the world, it's not easy for them yet.
European, that's a good point.
Yeah, like for instance, the business model behind Robinhood is not that popular outside of America.
No.
The products like anyway, the bottom line is that it takes time, I really feel like most of the world still doesn't have a way, like vast majority of the world is still not using this for stocks, which is a shame. In Israel, for instance, it's barely possible to do something with this at all.
Really? Okay. See, I didn't know that. Yeah. So that's interesting. See, I'm sitting here in a bubble thinking everyone has access to this.
No.
Actually, they don't. So yeah, interesting. Yeah, good counter. Okay, cool. Let's move forward a little bit. And so we've got, okay, so we've gone through power validators. We've shown up the image. We've done that. What's next? What's next? Okay. Somebody would like some tentative dates, Mark. Be careful. Can we get a tentative date for the tokenomics release? What are some parts of the token?
So first of all, we're not releasing a tokenomics. We're going to release a proposal, which we need to vote. We can't really announce, we changed everything without talking to anyone. So we said we were going to announce it by the end of the month. So we have
yeah, and this person needs to take part and contribute.
What are some parts of the tokenomics that are subject to change? So we talked about it a bit internally and also with the validators. But of course, everything is up for change. Again, we need the consensus. But we want to play with the London fork. I don't know if people know about this. It's a fee burning mechanism that we want to activate that Ethereum has. We want it as well. Of course, in the short term, we want to approve any inflation changes. I think in the long term, inflation needs to drop. I think with migrating to a Bitcoin chain, it needs to drop. Incentives need to be kind of realigned. So in the next 12 months, there are going to be tokenomics changes in the inflation if we want to scale these things. So that's very important. And you're basically asking, the third question is something I already mentioned. So the plan is to reduce deflationary. So the bottom line is really simple. There's a distribution phase. We're now entering slowly into growth phase and moving from just going from 0 to 1 to like from expensive tokenomics to constrictive tokenomics. Just like you see with the Fed, it takes time. So even when the Fed said that they want to reduce the balance sheet or move into a deflationary model or move, constrict the balance sheet, it still takes years and years and years. I hope it will take months but let's see.
Well, that's the beauty of the decentralized world, isn't it? That if people participate, then we can come to decisions quicker and faster. But yes, good answer. Okay, cool. So last question.
I'll tell you like an honest, because it's not the first time this topic appears. Unfortunately, last year we were in the middle of doing like changes in our tokenomics until there was a really big increase in activity on the network, and then those discussions subsided, and then we're coming back to it exactly a year later. So governance is not easy. This time, I hope we can do some like better job at discussing those things. And this is why there's a whole team called Fuse 2.0, dedicated team only for this roadmap, only for those governance discussions, and only to actually build on those plans, because some of this will happen outsource, will not be handling it in-house, but a lot of it we're going to build ourselves. So that's a big change from how we worked until a year ago.
Yeah, big changes there. Okay, so one of the questions that I suppose I might be able to also answer this a little bit, but I will ask you, of course, regarding targeting business adoption. Do you guys already have a strategy in mind regarding the acquisition of these businesses? So I guess this person is asking, what's our go-to-market? What stage are we at now? And how are we kind of identifying prospective businesses? So Mark, do you want to take that? I might be able to add to it a little bit.
So I think there's a lot of interest in Web3 payments. The fact that when we started Fuse in 2019, it was really hard to explain why would a business need a blockchain, or why would a business pay using a blockchain, or why is it even interesting to do stuff that are not speculation and investment on a blockchain. So I think today it's pretty clear that this is really something that is in demand, but there's not there's like only 30 million users in crypto. So we don't see a lot of real world use cases in crypto at all. There's very little examples, and most of the examples we see are really from companies like Adidas and Nike doing NFTs, and really like the biggest companies in the world, like Starbucks, are using Polygon, right? So Reddit is using Polygon, Instagram is using Polygon. So we see kind of like the same ideas in terms of who using it. We still don't see massive adoption from businesses, but it's clear for us that that needs to change. And this is usually something that is a bit slower and takes time, because B2B, especially the long tail of businesses, they're not just spending money on every new technology that comes around. They need it they don't want to be the guinea pigs. So what we want to do is see what is find a go-to-market strategy. So today, I'm happy to say, after 3 years of interviewing operators and talking to operators, you wrote it also in the white paper, we can draw a common denominator. All the companies that are coming to us, the common denominator between them is they're all companies with some business efforts. Usually they're local. Usually they're very, very focused on fiat. So for instance, we have custody operators, companies that can do custody, that can have like an e-money license, and they just need the wallets. They need to be able to build a product using their custody reserves. So they have a certain technological need, and they know more on the solution side. They understand more the problem side. We understand more the solution side. So this is why it works together. And those companies, usually we call them operators. Why operators? Because it's not a single merchant. It's usually operators that do like a lot of footwork and work with a lot of operators. So we're talking about groups of merchants, groups of food delivery people, groups of online sellers. We're talking about retailers, credit rings. We're talking about charity projects. There's projects that have to do with a little bit more novel, use cases. For instance, identity in Africa. So issuing a credential for a person, it still need to be able to hold money using that credential. In the end of the day, it is all powering and using the same contracts. We have a project in Thailand, for instance, that is doing NFTs as a loyalty product for businesses. So we see a lot of this. Is like a generalization that all of this is Web3 non-custodial products where the operator doesn't need to do all the heavy lifting. So I hope that answers the question.
Yeah, definitely. And I think just to add to that, in terms of like we're finding those avenues as we go along as well. We know what we want to target, but we have to use certain type of communication. There's a lot of education that needs, there's a big gap in education between business and us, basically, what they know about and what we know about. And we've got to bridge that, and we've got to educate people on the benefits. Like we showed the price benefit earlier. These kinds of things are quite compelling. And I think the more we can hammer that home as a company, the more successful we'll be in converting people. And like you say, Polygon, having Starbucks, these kind of landmark businesses, nobody wants to be the guinea pig. So if it works over there, it'll become more appealing, right? It's a good point, actually, Mark. I never thought of that. When you're approaching small business, it's quite daunting and scary, right?
I think what people forget is that and that's really important to understand. When we try to understand what is the innovation, like where's the innovation, and people say crypto about a lot of stuff. It's like super vague. They say blockchain, it's still vague. They say they talk about using a blockchain, or NFTs. There's a lot of disinformation. I think the really important thing is the fact that contracts allow us to separate the business logic from the consensus. So this is very important to understand for our community. This is also what we will explain a bit in depth in our roadmap. That you can work on building. You can work on building like a more scalable consensus mechanism. And in parallel, you can work on your business logic, and they don't necessarily need to be the same effort. They can work in parallel. So this is what we aim to do with this roadmap, to really scale our efforts. Until a year ago, it's been like one team building,
in
a
silos.
network. Yeah, like honestly, we've been overstretched because the team was basically doing a lot of things for a lot of customers in a lot of target audiences. So today we have Fuse, which is telling a clear story. We rebranded. This is exactly why we did it. So we can tell a very simple story. We had a very complicated story, but now we can tell a simple story. This is a network for businesses. First and foremost, a public blockchain ecosystem for businesses. And whatever comes with it, we can elaborate. And then you have Charge, which is a SaaS product that tries to bundle everything under the hood, including the payment to the validators, including the payment to the power validators, including the SLA that businesses sometimes need. And just wouldn't build a mobile product if you can't really handle the backend, right? So this is the backend, this is the business logic layer, this is the middleware, and it's non-custodial, of course. And the last thing is the consumer-facing part, and it's all of one open source stack, and we created this separation. So Voltage is focused more on this consumer-facing DeFi consumer product, and the middleware and the network. So that's really the way to scale. What we had before wasn't scalable.
Yeah. Okay. We had a question, and I want to bring it up because it's an interesting question, but I think it kind of answers itself because we're sitting here doing this right now. So this person is saying, it'd be great to see more Fuse members be more involved with the community chats. Misha does a lot of the lion's share of moderating. Well, that's his job, guys. So that's why he's there doing that. And then it says, can we expect Mark or Rob and other decision-making team members to check in on token holders? And what I wanted to say is, this week alone, we've done 2 live streams. I think I've done maybe 5 or 6 live streams with you, Mark, and we're live streaming all the time and we're doing community events. These are the opportunities for you guys to come and ask questions, like today. These are the opportunities. So Mark is here. He is visible. He is completely transparent, and he is open to all and any questions. So I like that question, but I just want to point out the fact that we're doing more and more. And perhaps that's something that person doesn't know, that we have ramped up on our transparency, I think, Mark, in terms of doing things like this, doing more AMAs, more community interaction, right? So
yeah, so I think it's fair to say that the team, especially me, were a bit in back to the drawing board mode the last 6 months. I'll tell you why. First of all, the last 6 months was mostly spent on research and events. Not our events. I personally don't go to events like this. I'm a product person. I don't prefer to go to events. But in a bear market, going to events is very, very important. That's actually the best time to go to events, especially if they're more technical, and especially since you can actually feel the pulse of the community and see what others are doing. For a business perspective, understanding the timing, you can't just, it's a huge open ecosystem, and it's important to feel, what's happening in the market. So that was one reason why there was a little bit of quiet period. Also, we understood that we need those all a lot of ideas, but you need to bring them down to the surface. And before you can this rebrand is not it was for us a blocker to push out momentum for the network. It was a blocker to push out any meaningful discussion, any meaningful explanation. It would always stuck on the fact that we don't have a coherent story, that the story needs to be simplified. It's not a matter of changing a logo. Actually, the changing the logo is just a means to an end. You need to understand what's the end, right? You need to understand why you need a token in the first place. I think we were very, very passionate about, thinking about the business case, why you need the blockchain, and why people will come to your blockchain, why this blockchain needs a token, and not think about how to do it, because I felt like things like privacy, things like scaling, those are not the things we need to tackle ourselves. We need to tackle business adoption. And that means building a blockchain which will be a means to an end. And that's how, by the way, how I believe business will build in crypto in the future. In the future, if somebody wants to build a wallet, is not going to invent a new wallet technology. If something wants to do privacy, wouldn't invent new privacy technology. Same goes for trading. Today, every company is building a new text, a new algorithm, a new. So no, I think it would be more about services, just like the internet, and less about the protocol. So we want to build a blockchain for business adoption. This is in our DNA. Last 6 months was restructuring. This is why we've been quiet. It was a lot about travel and talking to people. And Luke asked why we're not in the groups. I actually feel like it's not my forte, but I'll take it into account to be more in the groups. I'm saying it's not my forte because I'm not a social media person, and I get bombarded on Telegram. But sometimes I need to take a deep breath and get in the get in inside. But again, we will improve because again the project enters a new phase, and we can talk a bit more, not a bit, but a lot more about what we've been thinking about in the last 6 months and how the next year will look like. So yeah.
Exactly right. Things that have to, there's a work phase that's required before we can come out swinging. And some other companies are just coming out swinging with nothing behind them. So we definitely don't want to be doing that. Okay. So last question, Mark, because I think it's quite a good one as well. It's about ecosystem funding. So will a new ecosystem fund relaunch, because we did have one in the past, as I remember, to attract new, and they've said DeFi, gaming, other Web3 projects building on Fuse. So number one, would we relaunch such a fund? And number two, would we be looking to onboard such projects, or would it be a laser focus on payments and wallet builders?
So let me get something straight. I don't think DeFi is a vertical. It's all verticals. Everything that Ethereum is doing, I know it's controversial, is DeFi. DeFi is basically like saying contracts. In my opinion, it's a fallacy to separate DeFi from NFTs, let's say. DeFi is NFTs. DeFi is DEXs. It's the everything you can do with contracts. This category is called DeFi because in the end, that's what what Ethereum is built for finance, decentralized finance. It wasn't built for social media. This is why you have other technologies. It was really tailor-made for finance. That's one thing. The other thing, GameFi needs payments more than anybody, because the only thing GameFi needs is a way to take money in and out of your bank account.
Microtransactions is what it's all about with gaming, right? Like that's what it is. It's microtransactions, needs to be cheap. So it's quite relevant. But again, it is just DeFi, most games. You're just accruing tokens, some little steps in between maybe.
Yeah. So I feel like the ecosystem fund can't launch when the token is on the bottom. So that's the plan in the next year. It's a matter of timing. We have money allocated for this. We don't want to do it as a standalone effort.
All right, makes a lot of sense. Okay, Mark, we're going to wrap things up for today because we've handled a lot of questions here. I just want to give a shout because I've got questions that relate to things about lending on the Fuse network. I've got questions that relate to things not to do with the white paper, to do with Fuse Cash. If you're listening and we didn't answer your question, don't worry. We'll come into the Telegram chat and answer those questions. There are answers available there. Plus, we'll have another community call to take more broad questions about.
I just want to say something. This guy is asking Eddie. I will be happy to join the chat in Telegram and answer. But the bottom line, you're asking questions about DeFi and Voltage. Happy to do another MA and talk about it. I want lending on Voltage. I think this expectation that in an hour I can answer all questions is a bit like it's hard to talk about your questions and about Fuse 2.0. Liquidity on Voltage and liquidity on Fuse and marketing efforts. Happy to discuss on Telegram.
Yeah, Eddie, I think that's fair enough. Like we're here to talk about Fuse 2.0 and we can answer your question, no problem. And if you've asked it many times, then we'll answer it for you. Not a problem.
I don't know still what is asking though. I see like
anyway,
7
No,
messages.
there's a solid question there it's about lending, which is what I said.
Okay,
We're not here.
We're working on bringing lending protocols. I hope that we will bring. Unfortunately, last time we voted on it, the Voltage community voted it down. We can prioritize it if the community wants it. Let's discuss. By the way, I met all the guys this week. There's a lot of other lending protocols we can reach out to. We're actually talking to a lot of other lending protocols. Anyway, that's not a contentious question. This is actually very transparent.
No, it's a good question. I just wanted to pull this one up as well. So this is Veggie, one of the projects that's using Fuse Tech, and they've just jumped in to say, hello, we're a project based in Liverpool, and we're using the Fuse Tech, and you can check out our video here. So there was a question I was going to end with, actually, Mark. I think it's quite relevant. So let's take ourselves into a theoretical situation, right? I run a business. I've got 5 stores. I sell skateboards and skateboarding equipment. I want to embrace Web3 payments because I'm getting screwed by Visa on my payments. Talk to me. What can I do?
Go to charge, to go through the Fuse.io website to the charge website, open an account, and you will have a tutorial to get the first steps. It's really easy to fork the wallet, and well, for our team, it takes a few days to launch a completely new white label wallet. So if you want to start there on charge or even contact us, you can do it. And there's a lot of documentation. And in the next few weeks, we're also going to launch a new product for charge, a completely new documentation for the SDK, and a new version for the SDK. There's going also to be a web SDK, not only a mobile SDK. So all of those things are very relevant. And Eddie, please, just so it's clear, the last time we tried to do something without Voltage, we got a big crisis. You're asking about why lending is connected to Voltage. I will explain very clearly, because lending protocol generates fees, and I can't, as Fuse, be taking those fees. Just like, it's not my, you're asking the Ethereum Foundation to collect fees from lending. This is the reason we created Voltage, because somebody needs to govern, how much fees we're charging, what assets are going to be there. And you're saying it needs to be the Fuse community. I'm not sure. I don't think Fuse community needs to be in charge of a lending protocol. This is why I'm saying that this needs to go through Voltage. And let's continue this discussion on Telegram.
Yeah.
Our interests are aligned. Everybody wants lending on
Yeah, the question's a good question, Eddie. Like, don't get upset. Like, it's fine. Like, everything's cool. We'll come and answer that question. Mark will come in and sort that out. Okay, cool. Let's pull this into a close then. So we've answered a whole bunch of questions about Fuse 2.0. I'm sure more will arise. And as we said, we're going to do our best to keep outlining the basics and how people can get involved here. So thank you, Mark, for your time. Really appreciate that. Thank you, everyone, for joining in and the questions that came in advance. And as I say, if we didn't answer any of them, we will get to those because they're about topics that are not Fuse 2.0. So we will get to those. Don't worry. All right, cool. Thanks for your time, everyone. Mark, enjoy the rest of your day. I'll see you very soon. Take care, everybody.
Thank you.